What's going on, boys? Charlie here with another video. In this video, we're going to go over the trades that I took this week and the trades that I saw for my entry model, the trades that I've skipped and why I've skipped them. So, little spoiler, I have taken no trades this week and I have skipped seven trades I have skipped, which all of them lost, and I'm only going over 7 because these are the trades that are 100% valid for the entry model. There's genuinely nothing wrong with them at all. And these are the trades that you're looking to take with the entry model. These aren't any trades that are, horrible for the entry model, and this one ended up winning because of news, this and that. I don't go over that type of stuff because that's the unprofitable stuff. We're not here to go over that. We're here to go over the actual good trades that popped up this week, and why I skipped them and what I saw. So I'm not going to be going over anything really deep in context. That's for my Discord only, and they already have pretty much all the information they need for all of the trades that went over this week, but I will still go over them on YouTube here, and I will still kind of explain some concepts here, just not really that deep. But yeah, we'll pull up the charts here and I'll show you guys the trades. All right, here we are, and again, these are the trades this week. 0% week, I didn't take anything, and we had about 7 trades that popped up. So yeah, let's just get into it. Right, we have a Euro JPY trade, and again, before I start, in case anyone is new here, I am going to explain my model just a little bit, right? We want to find trending markets, and when things are trending like this, and we have a retracement, right? Constantly when we're bullish, we have to seek opposing liquidity, okay? We have to seek opposing liquidity to put liquidity into the market to take those orders to them. We can continue up. Or you can't just pump, forever, right? That's just a basic market theory. So that is essentially exactly what we look for. So we look for trending markets, and we want to see price take opposing liquidity, and then we have demand zones, and then from there we have strict rules we have to adhere to. After we take that liquidity, right, you don't want to see candles close inside the zone or anything like that. You want to see it take liquidity nicely, and if it gives us that valid reaction from that is when we're going to be trading and continuing up from there. So that's just a little breakdown of my entry model. I have a full video on it on my YouTube, full strategy breakdown, but you can see it kind of like this. This is a low quality trade, but you can see it essentially. I will kind of draw it out for you. You have liquidity like this, okay, and price will come down and take liquidity and continue up, okay. But now let's go into kind of the deeper stuff on why this isn't a good trade. So are we in trend? First of all, that's the main important thing. Yes, we're in trend, okay, cool, we're in trend. From here, and I'll tell you guys why I don't like this trade, is purely the price action. Purely the price action from here. This really is no real liquidity. This is some liquidity, this is some liquidity, and this is some liquidity, but we have never taken our highs. So what essentially happened? Well, we're in a bullish market, right? And price is constantly putting in lower lows, right? And price comes here, makes another lower or higher low, and we come up, and what do? Well, from here we have our high, and we have failed to make a new high. So we've made a lower low, right? We come down again, make another lower high. So price is essentially starting to make bearish price action, which is cool, fine, whatever. But from here, where's our liquidity? Well, our main liquidity, this isn't valid liquidity, because for our strategy, you have to have price come up and take out that high to show that you're in trend. But from here, we don't have anything, right? Prices never came up and taken this high at all. So that is not liquidity. From here, you're left with these two horrible levels. And on top of that, price is now giving you bearish price action coming down to this zone, making 3 consecutive lower highs here. So as we're coming down to the zone, what is the next factor? Well, the next factor is you have your liquidity right here, and price takes this liquidity, and what do? Well, we just hang around for 30 minutes. Hang around. And then finally, one candle gives you a little wick that finally taps into that zone. Just because that little wick comes in, taps into that zone, does not make the trade now magically valid. It's everything else that's leading up to it that makes it valid, and everything else that's leading up to it has made this trade invalid so far. Everything just looks horrible. It's the bearish price action, the horrible liquidity, and the horrible reaction we get before the zone. So when you get, again, a reaction like this, and it's just sideways movement like that, I'm not really looking into that. That's just showing that this is not enough liquidity for price to go and then take that bulk of orders and continue up by any means. If we've taken that liquidity and we've moved sideways for 20 minutes, there's no orders there at all. So that is why I skipped that one. And all we were doing was chasing deeper liquidity, essentially, on a higher time frame. So that's pretty much that trade. And then Monday in US 30 we had longs. So go over those. This trade right here, textbook. It looks textbook, right? There's the main thing was, honestly, in my eyes, was the overextension. I did not like how overextended we are, because what are you essentially doing? Well, you're in a bullish trend, okay, and you need to take opposing liquidity. Let's understand a couple things. I take strict 1 to 4s, okay, sometimes 1 to 3s, but if you're taking strict 1 to 4s on the earliest entry you can, which is break a candle, your 1 to 4s is essentially targeting up here at those highs, okay? So you're essentially betting on price to go and pretty much make new highs at that point, just about, okay? So when price is overextended from this leg to this high right here, you guys can see that massive overextension, okay? When we're retracing, you're betting on price targeting a specific bulk of orders, and that bulk of orders has to be enough to go and chase new highs. Do you guys think this bulk of orders is enough to then go and take and then go and make new highs? I told my Discord this is liquidity right here. You would see this, and if it would pump right here, you guys would understand that that looks really, really weird. You'd zoom out and it would look really, really weird, because you're so overextended from this leg that just a little retracement and targeting 2 candles and pumping again would look really weird. It's abnormal, okay? So if it's abnormal, then it's not going to happen commonly. If you guys, do enough back testing, you'd realize that it's kind of abnormal. So that was my main reason, was overextended, and I just really didn't like that because of that. It was really, really overextended from this low to this high. You're betting on these 2 bearish candles to have enough liquidity to then go and pump new highs. Genuinely, like that's what you're betting on, without price actually having a nice correction, and then we go and make new highs. So that's what you're betting on. That was why I didn't like this trade. That was literally it. And on top of that, same thing. Horrible sideways reaction. When we take this bulk of orders, there's got to be liquidity there. There's got to be liquidity there, because you're betting on price instantly going and pretty much making a new high. That's exactly what you're betting on, because that's where your TP is. So if you're betting on there being that much bulk of orders right under these 2 internal bearish candles, then you better have a nice reaction instead of 10 minutes of just sideways movement. And that's why I skipped that trade. So I didn't like the reaction, the overextension, paired with just the reaction. All of this stuff is entry model only. Like nothing that I went over yet is really Nova concepts. It's what I teach inside of Nova to have a deeper understanding of the entry model, right? But we use some other concepts as well, and these haven't even had to use these concepts. These are just pure entry model trades that you could skip, just with a deeper understanding of the entry model. So yeah, then we have USD longs or UJ longs at on Monday as well. So all these trades were on Monday, so we'll go over this as well here. This trade, I've made a YouTube video on it. Okay, so I'm not going to go really in depth here. Yeah, I'm really not going to go too much in depth, but bullish trend, consolidatory, demand, level liquidity, price takes that high, we come down, give a valid entry candle. Is this enough liquidity to send price flying? Why did price end up flying right here? It was because of Iran war news, okay? But that does not change anything about the liquidity we were targeting, in my opinion. You have all of this consolidation. It's not just going to take these 2 internal bearish candles and then just pump randomly. It's going to take the liquidity that the consolidation built. That's the whole point of consolidation, is to build liquidity. It's going to take the liquidity that the consolidation has built. Where's that at? These two lows. All right, so next we have oil. Okay, oil, I'm not trading right now because you can take a trade that's perfectly in trend, everything aligned, and people don't realize you get tweets all day long from your phone of what these guys say to each other and all these presidents and all these headlines, right? And it's all speculation on people longing and shorting oil, and it all moves oil prices. People don't understand that. It blows my mind. And that's why I'm not trading right now. I will show you guys. We go on oil and go on the 4-hour chart. Since this war, this is what you've been trading, bro. This is what you've been trading. It's just up, down, up, down, up, down, up, down. And it's all moved by tweets. All of these gaps, everything's moved by tweets. And blows my mind people still end up trading it. Blows my mind. Because I will show you guys, like, these trades. This trade right here, this was one on Tuesday, okay? This, we target 1 to 4s. This is never hitting a 1 to 4 at all on any single broker. Never hitting a 1 to 4. You can move your stop loss as close as you possibly want to. Right there. Have that pitch perfect break of candle that you want to. It is never hitting a 1 to 4. Okay? Not even close. So, this trade right here, let's zoom out. Okay, bearish trend. Okay, that's cool. Bearish trend right here. Price is bearish. What do we have? Well, we have our entry model right here. We have a nice level of liquidity. Price continued down. We took that liquidity right there a little bit. It's not my favorite, but it's on oil and it's in trend, so I'm not really too worried about that. It's more or less, my point being is there's nothing wrong with this trade at all. There's genuinely not a single thing wrong with this trade. And it lost purely because of news. Right here, tweet came out right before TP and straight to stop loss. That's what I'm saying, and it changes the whole entire trajectory of the day. It changes from bearish market structure, now we're to bullish, okay? So now we're bullish, the next day, what happens? A bullish trade pops up, okay? And from here, I'm pretty sure right here we had more news that came out just before New York open as well. You have building of liquidity. This absolutely massive candle comes down, takes out all of this liquidity. If you got a flip entry, you wouldn't have even hit a 1 to 2, and you get stopped out. And it's like, okay, well, from here, I thought I was trading in trend. I got stopped out. Now we're bullish. I thought we were trading bullish. Now you get stopped out in its opposing direction. It's back and forth, back and forth, back and forth. People don't understand that at all. And that's why I don't trade it. I genuinely don't trade it. I'll go over trades and I'll break them down if it was skipped purely from technicals, or if there's nothing wrong with technicals at all and it's a great trade and we skip purely on oil being oil right now. It is literally the whole reason of a war right now. Of a war and all these headlines, it's strictly oil, and you're trading it, a trend trader, on the 5-minute time frame. That's insane to me. That is insane to me. But what happens is people catch a TP and be like, oh, it's fine to trade now. And then they'll catch 2 or 3 more losses, and then they think they're progressing, and they'll catch another win and 3 or 4 more losses and go back and forth. And it's like, bro, you haven't made any progress at all. So yeah, I don't know. But that's my breakdowns on oil. And that's just, again, I can't even break this trade down in terms of technicals. That's what I told my Discord as well. I can't, because it's in trend. It's just completely, it's just oil being oil. Anything can happen at any time. When this stuff's over, then we can trade oil. I have 4 years test on oil. I know it's a great pair, but unfortunately you just kind of can't right now. So that's that. And then let's go over AUD/JPY. So we had 3 more trades. One of these I forgot to list down, but we're gonna go over them. So we're gonna start on Tuesday of AUD/JPY at 9 o'clock. So let's do that. So this, I'm not going to go into too much depth. This is mostly for my Discord, but there's something, a reason I was kind of weary taking longs here, and the main thing I can give you guys is we had liquidity right here, nice style of liquidity, and we have taken it right here, and we have moved. So what's left for this trade? Well, there's nothing left for this trade. So what happens is a lot of times it'll give you an entry candle, but guess what? It already took the liquidity. So what's it got to do? Take the liquidity again, take your liquidity of all this consolidation that's building, so then we can continue up. If it already took your liquidity, and I don't mean like took liquidity like this, and this next candle, you know, tapped into the zone and it was bullish and all. I'm talking about actually taking liquidity, genuinely pumping, and then coming back down, and you're just making lower highs at this point. That's all you're doing. That's literally all you're doing, is just making consecutive lower highs at this point until finally one wick comes in to take out this liquidity. So there was a couple other reasons as well, but I'm not going to go over that in my YouTube. That's for my Discord only. And that's that. So then we have another trade. This, I'm not going to get into too much depth, but pretty much took a major draw. We took some other things down here as well, which was very important. And we saw pretty much market structure shift from bearish to bullish in real time. At this point in time, higher time frame is bullish. Let's actually go into replay mode real quick. At this point in time, if we go to the 1 hour time frame, we are bullish, right? And we have taken these lows as liquidity, and at this point in time, when you see that and you drop down to the 5 minute time frame, we're bullish, right? Well, internally we're bearish, but we have to wait for bullish 5 minute structure to kick in. And what do you essentially see? Well, you essentially see price making lows, making manipulative lows, and then guess what? This is our last high, and we take that high. This is another high, we take that high. So from here, you have a higher low, and then from here, you have a higher low. So this is essentially market structure shift happening in real time right in front of your eyes. So you're shorting when higher time frames bullish, and we took a lot of stuff to show us that we're bullish. I explain it more in my Discord, but you're making higher lows now. Price action is bullish, so you're kind of all in for longs, but you're taking a short position because again, this is the, oh, I just switched my pair. This is your position right here. Liquidity, taking out that own low. Great reaction, but we're chasing higher. There's also lots of reasons to chase higher as well, that I explained. So yeah, that's why I skipped that one. And that was, again, just a great trade to skip. So I'm just gonna play these candles and go to the next trade because it was just a day after. So from here, you're thinking, okay, this is bullish price action. Okay, we're still bullish on all these time frames. We just took these lows. This is bullish price action, right? So what happens next? Well, ooh, price comes down and takes out that last low. Okay, that's shocking because I thought we were bullish. We were, right? But you have to adjust to what price is showing you. Okay, so now we just took out lows. Now this is not so much bullish price action. This is a lot more bearish than anything. So when I zoom out and I'm looking at this, I'm seeing, okay, we were bullish. We did take out these lows nicely. We had a market structure shift, but guess what? It failed, and we made another lower low. So at this point in time, I'm seeing price action as bearish. I'm seeing lower highs being formed and lower lows being formed right here. So at this point in time, I'm not really trying to long, but what do we get? We get a long position, okay? Right there, you get a long position. Now with the candle being closed like that, I would take probably break a candle, personally. So, but anyways, regardless, now price action kind of shifts bearish. Even if it's not 100% bearish, it is not anywhere clear enough for me to even be thinking of taking it. So from here, you have order blocks, right? This is just a 1 hour order block on the 1 hour time frame of bearish price action, right? This is your last high. This is a strong high. We don't expect this high to break because now it is showing us that price is breaking lows and we're making bearish price action. So I don't expect this high to break. If you're longing, what are you doing? You're essentially expecting that high to break. And the higher time frame tells the truth. The lower time frame does not tell the truth. So if I'm judging it by the higher time frame, I'm judging it by this is not a good place to long. So if you enter break of candle, like I personally would have if I would have taken this trade, this is your trade here. And I target 1 to 4s, sir. Oh. Even if we did it 1 to 3s, I don't think it would have hit. We test that order block one more time. and then we dump from there. So, and what do? Bearish price action keeps following through. We keep following through with bearish price action, and we make new lows. So that's it, guys. That's literally it. And that was the last trade, and that was on NFP as well. So I can't confidently say that I was going to actually take that trade at all because of, again, NFP. But that's it. And at least, you know, this week we actually had a lot of like setups genuinely pop up. That was good setups. Nothing wrong with the entry model. And again, I only cover the trades that the entry model is fine. Like, the trades are valid. I see people taking trades that genuinely they will be trending bullish like this, okay, and it'll come down and take liquidity, and then it'll come down again and tap into a demand zone like this. It'll clearly take liquidity, and then they enter and then it ends up just winning, and it's just like, oh, you know, I got a winning trade, and it's like, bro, you're not even trading the strategy. Like, you're not even trading the entry model. You're trading something random, completely random, that has no edge. If you tested that for years on end on every single pair you trade in the 5-minute time frame, I can promise you there's no edge there. We trade the way I trade because there's an edge there. There's a genuine edge there across multiple years on the trades the pairs I trade. So again, when price is trending, we have to seek opposing liquidity, and when we seek opposing liquidity, that's what is essentially our entry model. And that popped up greatly multiple times this week, but no trades. I didn't take any trades, and I skipped purely on context. The stuff I teach in my Discord, and pretty much everyone else skipped as well. This week there's just no trades this week. But great week. I can't complain at all, because again, me 7 months ago, I would have been taking every single trade this week, and I probably would have had another blown account. It was just back to back to back. So this is the stuff you have to apply. You have your entry model, you have to apply context and stuff like that. If you're interested in learning context and stuff like that, and how I actually apply to these charts, because again, on YouTube, I'm holding pretty much 75% of everything back, because I'm not really exposing kind of everything I use. That is in my Discord. I have a growing community that I'm working really, really hard to grow. I want to see everyone learn this stuff and apply this to their entry model as much as anything. If you guys are interested in that, I'll put a link below. If not, that's fine with me. I got a lot of free content on my YouTube as well. I just hope you guys, subscribe, like the video. It means a lot to me. And yeah, that's pretty much it for this video. So I'll see you guys on the next one.